Looks
You see
good.
it?
Looks
All
good.
right. Good. All right, let's get this ball rolling.
Well, as Danny was saying, I'm an old floor. Yeah, we first, Danny's memory is as short as mine is at our age. We forgot the 10 years I spent on the floor. In the 80s, I was a floor rat for a long time, worked for companies like the Drexel Burnham that he was mentioning. And I was eventually I got my seat as a working for a company, an old Payne Weber desk. The Drexel morphed into a different desk. We went to work for General Electric. I ran the British pound trading operation there for a cup of coffee, and then that busted out because GE decided they didn't want a boutique FX desk as competition because they were a huge clearing operation for FX back in the day. So I went off the floor up into a merchant bank. I don't know if any of you have heard of Chicago Corporation, but it was big back in the 90s. We were market makers. We were making markets on Globex before when Reuters still owned Globex, before the CME had even bought into it and acquired it to the extent that they have. I mean, obviously it's their product, but Reuters came to us and we were doing a lot of their beta testing. They actually paid us to make markets in the back, what they used to call the back currencies back in those days, like the Aussie and the Kiwi, the New Zealand, and a few of the others that ultimately became really good. And then as Danny suggested, once I was on the provider side, I went to a lot of the different desks, worked Lind Waldock, got some good friends of mine. Then we merged with Linco. Then those desks were acquired by Refco, and I was making markets. Ran the European shift at Refco Cash for a time being, and spun that off when Refco went under. I mean, it was one of those things. It was just acquisition after acquisition after acquisition in those days, and the firms were swallowing one another up, trying to get more market share. It was a little, however, foreign exchange was still kind of a wide open, semi-regulated marketplace in those days, which is why some of these companies, the management particularly, just they got away with murder. I mean, it was you could pick or choose, but the fact is that a lot of us got a lot of experience running a lot of major, as Danny would say, weight when he was doing the shakes business. I mean, those guys all had every futures position and every options position that matured had a spot FX component, which you would have to roll out of to make it profitable, to actually book your profits or your losses. I mean, but it was always profitable because there was always a margin in that trade, not the kind of margin that you're thinking of in those margin terms, but a profit margin. And it was big business. I wound up ultimately running. I was the risk manager, chief dealer on an agency, what we call an agency trade desk, which is an at-risk spot desk back in the day for a Chicago brokerage known as Aileron. And it was a nice shop. We basically, we were an accommodative desk, which is why they call it an agency desk. We basically worked for the brokers there were a huge brokerage lineup, both in-house in the bullpen and outlying in various suburbs. They had little branch offices, and those were the days when it was starting to become regulated, highly regulated. And I ultimately, that Aileron closed their desk down, Gain Capital. Aileron didn't have a taste for risk, so they decided to close us down. Gain Capital took that over. I left Aileron, went over to PFG, baby, Peregrine Financial Group, run by the famous or infamous Wasendorfs. And I think a lot of you probably know what happened to them. I'm sure many of you have even potentially suffered at the hands of that malfeasance. It turns out that Russ Sr., unbeknownst to everybody there, I mean, they put together a great operation, trained a lot of pros. There was a lot that was really terrific about Peregrine Financial Group, or PFG Best as it became branded. but nobody knew. I mean, that Russ Sr. was sitting there and pocketing all this dough. So let's moving along. My experience clearly is institutional. In about 20, I went to work for INTL Stone, FC Stone, doing some institutional sales. I'm familiar with liquidity providers and aggregators and that type of thing. Like Danny said, I've been in this racket for a long, long time. Never was a seat owner, never had that advantage, unfortunately, because you choose different paths when you're going down this thing. But Vince and I have got a lot of things in common, and there's a lot different about us, which is what we hope to bring to MTS, to MrTopStep. Vince is a pure retail trader and a really good one. And I love hooking up with guys like this. I'm a trader, but remember, I was a market maker. We were always, I was a prop desk trader, I guess, if you will, and a risk manager, because we were always making markets to other people. And that's how I learned the business. I have translated it into trading. I've seen every indicator and every sort of algorithmic creation that the quants have come up with. And I've been trying to explain to people through a number of small partnerships over the years, more recently, the last 4 years or so, when I've been involved with various IBs and projects like that, we're kind of at war with the cash side of the marketplace in a way, because they program against the retail trader. The retail traders are market takers. They are the market makers. We don't have that advantage of size, as you would say, because that's not how it works. We are subject to the kind of whims of the marketplace. It is an enormous marketplace, as we will tell you over the coming weeks and months. It dwarfs all of the other markets combined, with something along the order of magnitude of $6 to $7 trillion equivalent notional a day is traded, and it's absolutely monster. Now, the regulation, the over-regulation of FX has kind of taken a little of the luster off for, let's say, the last 5 years. But I see a big change coming in the marketplace for a lot of you traders, and particularly in currencies and FX, spot FX, which is what we specialize in. What we see this really a kind of a new dawn coming, because they're probably going to lighten up regulations, which is going to free up banks to cater to smaller providers, banks, non-banks, liquidity providers that will offer a lot of access to your basic retail trader. That's what we're looking for, and we're looking for a kind of an explosion in also the sort of what we call the market fundamentals of currency trading, which is based on interest rate moves, among many others, but just the interest rates coming off of zero and having central banks starting to play that game again. Factors like having exports, the deals that this new administration is talking about making, Britain, the Brexit, leaving the European Union, and all these new deals, trade deals that are going to be set. These are going to cause a lot of central banks to start looking at protecting their export market, and that's going to require tweaking rates. And tweaking interest rates is the all-time best fundamental for driving our markets. It's not just all headline driven stuff. Obviously, with Trump around, we're going to have plenty of headline driven stuff. No worries, that's not going anywhere. But we are going to have a good fundamental marketplace again, and I'm looking forward to being on the educational side and accepting this as something new. That's the only reason that Vince and I are into this again. We used to work about 6 years ago in an educational IB partnership. Vince left to go off on his own and do a couple of other things, get on with another venture. The one I had was the guy, the main educator there, turned out to be not the most honest fellow, so that thing broke up. But Vince and I got to know and like each other a lot. We understand one another, and he's a terrific trader. He understands how the market moves, and he's also a money manager. He has he has a good sense for the algorithmic type of trading that happens. In other words, he understands his indicators, and like me, he's got a great feel for support and resistance, when to trade, when not to trade, when to hold it, when to fold it, that type of thing. And we think that we can impart a lot of this knowledge on a sort of an ongoing basis to people that care to join us in the room. Now, we know you're all futures traders. If you want, let us know if you're at all interested, or if you've ever traded FX. We'd love to hear from somebody. Just go ahead and give us a heads up in the chat room. I think if you've ever traded spot FX, you know, for one thing, that it's cheaper. Even in non-US traders, it's a lot cheaper because the leverage is quite higher, much higher at like 100 to 200 to 1, which can be good and bad, as anybody who's ever quantified their risk understands. But basically, you know, you have futures margins on the pound contract, for example. The full margin is almost $4,000. You're looking at almost $4,000 for the euro. They've upped the yen lately to basically like a 30, what amounts to in spot terms, they've lowered it to about a third of what it was. And so now the yen contract is almost $5,000 to trade. So, and you're still operating at a 50 to 1 leverage in spot FX, or a 2%, if you think about it. So that if it's 125,000 equivalent, which is the contract equivalent, say for the yen or the pound, that's about $2,000 to trade in the spot market, although it's a little more in the pound because it's denominated in sterling. The euro is 100,000 per contract. Is there 125? I don't even remember, but it's whatever. It's 2%, so it's $2,000 or 2,500 to trade a full contract equivalent. And in spot FX too, you can trade any amount that you like. So it's important to understand that you have that advantage going for you, and that's something that we're also going to touch upon as we move along. What Vince and I are trying to do here for MrTopStep and the community at MrTopStep is to bring in a new segment of aficionados, traders, people that have traded FX, that are interested in trading FX. What we are going to do at first, we don't have any trick indicators to sell you or anything like that, and that may be seen as an advantage or a disadvantage for some of you, because we know damn well that there's really no magic bullet. What we'd like to do is train everyone how to become good standard 104 chart traders, understanding FX volumes, FX, the basics of all of the indicators that are used, kind of consolidated into a sort of a unified perspective. And because I know from trading on the institutional side in the spot market for years and years that the traders are no different than you or I. They just have a lot more experience because they sit and see this on a tick by tick trade every day, and they see the volume that's coming in because they are hooked up to the big liquidity aggregators like Currenex and the like, that have all of the major, the tier 1 bank and non-bank providers coming in. Now, fortunately, we have access to that kind of liquidity, although the volume numbers are a little bit different from our perspective, but they're still big enough for these charts to become extremely accurate. So long story short, we are bringing foreign exchange to MrTopStep. We are going to be posting our trades, Vince's trades, in the room. What we're going to try to do for a couple of hours every morning when the New York session opens, basically we're going to be there from 7 to 9 in the morning, Chicago time, 8 to 10 Central. However, we'll run it long through the London close when need be. I mean, this is going to be the kind of thing where the market's going to tell us what to do every day. If it's utterly dead and you're waiting for some kind of an announcement, we'll shut it down early. But we're going to try to have a trade every day. It might be 3 or 4 trades every day that will be seen. It may be none at all. Vince is an extremely good position trader, and being a 24-hour-a-day marketplace, which is divided up into 3 sessions: the European session, which runs for Europe from basically 7 till 4 o'clock their time, which runs to about 10 or 10:30, 11 o'clock Eastern, our time, almost noon, actually, Eastern, depending on the when the zones change. And then the day closes in New York. The trading day closes in New York at 4 o'clock New York time, or 5 o'clock New York time. And then it goes into that sort of Netherland while we're waiting for Australia comes in the meantime, but Tokyo and Hong Kong really open the foreign exchange market for the new day in the evening, which is around 6 or 7 o'clock our time, which really defines a new session. All of these banks do something called passing the book. They pass their book of orders, stop levels, commitments, everything they have. It's very important for these institutions to balance their books on a daily basis. That's something that we can kind of look into and help decode as we look throughout the day at the markets and see where these trades are going, and if the spot dealers are flattening up, that tells you something. If they're overloading either long or short, that tells you something else. But the fact of the matter is that these banks and non-banks, the big institutions, all have to keep their books balanced, unless they're a hedge fund or somebody taking over, you know, a mega position on behalf of a client. They have to more or less keep their books balanced. That's a little trick that we're going to be sort of revealing as we go along, which will really help you get a handle for what it is that you might want to do with your position. Now, we're going to be introducing other friends and products and things like that as we go along. So this is a long-term commitment we're making to MrTopStep. We want to invite everybody to come in and join us as you can. We're going to keep the room open and free for the time being. Obviously, it's all open during boot camp. We're going to post trades in our room on our screen as we acquire them, as Vince sees them. If they're valid, worth looking at, we'll post screenshots, and we're going to eventually build an alert system. You'll have people that subscribe and join our little club. We'll have the opportunity to see get alerts as well by email and private Twitter account, that type of thing as well, for our trading alerts. So we're going to try to build this into a full service sort of FX operation with you, the retail, you know, the so-called retail trader, in mind. Now, we can teach anybody from a brand new, somebody that's just exploring FX for the first time, that wants to know about platforms and charting platforms and margins and all that kind of thing. What size accounts can you open? How you're going to get the most bang for your buck and that type of thing. We can do that, or we can, if you're a real experienced bang it out trader and you've got 8 screens like Danny does, and you've got, your exchange fees are lows because you've got a pipeline that cuts your latency down. We can help you too. There's a lot you can do in FX because you can get a lot of bang for your buck. And it's real easy to get in and out. It's very liquid market. If you've got, you can trade mini lots of 10, and for a buck up tick, you can trade standard lots for 10 to 12.50 a tick, or you can trade big time numbers, half a million notional currencies, 1 million notional currencies, very easily. It's extremely liquid market. You can get in and out. The stops are always taken care of. We don't have any tricks. For example, during non-farm payrolls, as Vince will tell you, we'll show you how to trade non-farms, but we don't have any special tricks for making guaranteed money, that type of thing, because you have to respect the marketplace for what it is. You're going to get all kinds of head fakes during a release like non-farms that has 5, 6, 7 components on it coming out. So what I hope I've imparted is that we have a lot of knowledge in the way the market works. As you're going to get to know Vince, you're going to see what a terrific trader the guy is. Don't be alarmed by his cursing and going crazy, because he's just that. He's a trader after all. He's like all of us. And without without me yapping anymore, I want to introduce Vince. And this is what we call Master Trader Vince. And in the room, I'm Chicago Bill. And I'm going to turn it over to Master Trader Vince now and let him show you what he's looking at today. So, Vince, all yours, buddy.
Hey, thank you so much, Bill. And I want to thank everybody for being here today, for taking the time to join us. It's a privilege for me to be here today with these experienced traders. I'm really excited moving forward and building up the Forex division. A little bit about myself. I come from a telecom background. I started my own business back in 1987, and I was in the telecom industry, and we expanded our business nationwide. So back in the late 90s, when we had the Y2K boom, our industry really took off. We saw new companies being created like Cisco, Avaya, and things were just going haywire in our industry. We were installing fiber optics all over the country. And that's when I got the idea that why don't I go in and trade for, I want to trade these stocks. So I didn't have tons of money to spare. And so I want to know what is it that I can trade with a decent amount of money. And I dabbled into options. So, and back in that time, in the late 90s, options were so easy to trade, especially in the telecom sector, because no matter what you bought, it doubled. So I was hooked on Cisco, and I just kept on buying options and options, and they just kept on doubling within 24 hours. And I said, this just can't be. Well, like anything, everything comes to an end sooner or later. So when we had the huge correction, I think in 2000, 2001, I just put trading all aside, and I continue focusing on my telecom business until about 2005, when I started to see a slowdown in the industry altogether. And that's when I decided to go back to a one-day seminar hosted in Miami on options. I want to go back into options. I figured that, if I'm going to be spending some trading knowledge, I want to go back into it and build on this. So as I attended that seminar, there was a whole bunch of traders there. I met a few people outside after the seminar was over, and they asked me if I was interested in trading Forex. And I said, well, what the heck is Forex? They said, well, you trade currencies. I said, well, why on earth would I want to trade a currency when it just moves 1 cent a day? I mean, I can't make money if something moves 1 cent a day. And, then they said, well, the beauty about Forex is that you've got leverage. And that's when the bell rang, and I was hooked on Forex. Now, like every beginner, we're always looking for something, some kind of a system to help us make money, right? I mean, everyone is looking for an easy way to make money. So let's not kid ourselves. So I did some research on Forex, and the first thing I came across, like everyone does, I'd say, is these things called robots, expert advisors. So, I got hooked. As a matter of fact, one of the advertisement was of a robot was from one of my neighbors, not too far from where I was living. So I said, wow, what a break. So I decided to go visit him, and he showed me this software that he put on this platform right here, and it would just start trading by itself. And I'm saying, my God, I go, this is great. I go, I don't even have to do any work, and I can make money. So he loaned me the expert advisor in the demo account. He says, here, try it out and let me know what you think. So I said, sure. So one night I went home, and when I went home, I went up to my wife. I go, look, honey, I think I found the next, get rich. Well, I didn't want to say scheme, but get rich opportunity. So, so basically, what I did is I put this expert advisor on my demo account, and I started with a $10,000 demo account, and I let it run for 24 hours. And when I woke up next morning, the account was at $25,000, and I said, wow, I cannot believe this. 25. I mean, I just almost, 2.5 times my money. I go, my God, if I can do this every day, whew, we're set. So what did I do? Like everyone else, I rushed and I opened up a live account, and this was at FXDD, and so I put $10,000. And the deal I had with the programmer was that I had to pay him 10% of the profits. And I said, why not, right? So we put this expert advisor on my live account, and we started to trade. And next thing you know, I'll tell you right now, my $10,000 turned to 7,000. And I said, whoa, what's going on here? Why is it turning? Why isn't it turning it to $25,000? Why did it go from 10,000 down to 7? And that's when I realized that I've been had. And let me tell you, I mean, I was fortunate that I only lost $3,000, but I lost $3,000 on something that I did not understand, and all I saw was a way to make easy money. Because everything you would see back when I started in 2006, the forex industry was at its infancy. I think retail traders started to appear in 2002, so we were just like 4 years into this, so it's still at its infancy, and everyone is just advertising, put the software on, go to the beach, and when you come back home, you'll see this in your account. And and I fell for it as well until I actually tried it and I lost money. So I had to start all over again and do my own due diligence, and I needed to find these organizations or educational services that would actually teach me how to make money. And obviously in my mind, the only thing I was thinking of is the easy way. I just want to get some kind of a software, put it on, and make money. I mean, that's all I care about, because I don't have the time. I don't want to spend all this time staying in front of a screen. And well, little did I know that as I went from one educational service to another, all they were teaching me was their methods, their systems, their indicators. And I mean, it's like any system. They always turn around and tell you, well, look, it works 60% of the time, 70% of the time, and so forth. I go, that's great, but the problem here is this: is that you still have to figure out when that 70% is time to trade. If you don't know that, then it won't work at all. So I was stuck in that dilemma that any educational service that I attended, and I paid some serious money, um, they were just teaching me a system. And I go, well, how is this possible? I go, how are these professional traders, bankers? I mean, they don't all have the same indicators on their platform. So how do they trade? I want to know how they trade. I don't want to be reliant on an indicator to tell me when I should be buying or selling. I'm not saying don't use them, but the way the organization is teaching people out there is that they always tell you to focus on your indicator. And I mean, again, I'm not saying indicators are not good, but how, like, I like to know, how can I get into a trade right at the top and get out of a trade right at the bottom, instead of getting into a trade halfway and getting out of a trade halfway. Right now, to some people, they say, well, it doesn't make a difference. As long as you make money, that's what counts. Well, to me, it did make a difference. And believe me, it makes a difference in the overall balance of your account. So I met one of these I flew to Minnesota, and I met one of these floor traders. And one thing he did for me is this: he was one of my mentors, and he convinced me not to become a trader. And I said, well, hold on a second. I'm spending all this kind of money to come and see you, and you're telling me not to become a trader? I mean, I didn't have to spend $10,000 to come and see you to tell me that, right? And the reason why he was telling me this, because he pretty well laid it straight to me. He goes, if you want to become a trader, you need to put your time into this. Don't look for any easy avenue to make money, because you're going to win some, but you're going to end up losing a lot more. If you're prepared to put your time and invest your time into this, then in the long run, you will start making money. And when he said that to me, it finally sunk into my brain, and I said, this is what I have to do. Well, ladies and gentlemen, I just want to let you know that from that point on, I spent 20 hours a day in front of my computer looking at these charts, because any indicator that someone was trying to promote to me, yeah, I mean, it worked, but it wasn't giving me the entire story, right? So by studying my charts 20 hours a day, and I'm going into 11 years of trading right now, so I've got about pretty well 20 years of experience if I calculate all the hours that I've spent in trying to learn how to trade. Well, let me say this, it's paid off. It's paid off tremendously, because I can actually trade for a living and make money, and I decided, and this is my promise, the promise I made to myself and to the Forex industry. I said, if I ever figure this out, and again, there are times that I do make mistakes on my trade, but at least I know I've made a mistake and I can exit out of a trade. My promise was, once I get this straight and I have a full understanding, I'm going to teach it. I'm going to teach it to the ones that want to learn how to trade. And I'm going to cut the BS and tell them exactly what they have to pay attention to when it comes to trading. So for the last 6 years, I've been teaching, I've been hosting other webinars, and I've been teaching, and I've got a lot of compliments from many students saying that they were so impressed on my trading methods, and I've helped them. I've helped their learning curves. I actually reduced their learning curves drastically, because again, no matter what, I can tell you and teach you and show you a few things. You still have to put your time into this. You have to know what's going on. So the reason why Bill and I got together is because on the retail side, when you look at a chart, you can't see what the institutional traders are thinking. And again, the retail side of the Forex only represents about 10% of the market. So that means the other 90%, okay, the other 90% is out there. It's not on this chart. So we decided to get together and share our thoughts together to see how we can present something to the audience, and with proper understanding. So here we are today, ladies and gentlemen, and this is what we want to do here for the next 2 days, is give you an idea of how we set up our charts, how we look at the fundamentals, the market structure, how we read price action, right? And how we look at our indicators to also assist us and give us confirmation. So that's pretty much it right now. So this is what I like to cover. And again, if you like what you see, we're starting our own room, I believe sometime next week, and you're more than welcome to come and join us and participate and ask all the questions. And it is a 24-hour room. So that's pretty much it for me right now, Bill. Anybody have any questions?
I'm not seeing anything on the chat at this point, but anyone that wants to chime in, go right ahead. What we want to do is, I mean, the price action is the thing, obviously. We want to follow the price action all the time, constantly, as Vince does. He sits in front of his charts and pores over it. I'm similar. I'm usually talking to guys in the industry and getting a kind of I guess the other side of the coin take on the marketplace. But we're always looking for really neat tools, analytical tools to bring to people. We've got a couple that we're talking to right now. That's particularly, we have one group that has an institutional aggregator that we're going to be bringing to the forefront sooner or later in our room. But we want to, for today and tomorrow, we want to go over how Vince sets up his charts, what he looks at, and the kinds of things that he's always looking for when he's looking for a trade setup. Now, he said the room's open 24 hours a day. When you join our room, our trading club, if you will, you're going to have the opportunity to get notified of trades as they occur. So we'll be posting, if we see, for example, this afternoon when Asia opens, if there's a yen trade that comes up, and Vince spots it. And it could be in dollar yen, or it could be one of the proxy currencies, the commodity currencies like Aussie and Kiwi, New Zealand dollar, both trade very, they have a lot more liquidity often around the Asian Open. And we'll post a trade in the room and let everybody know. And that will be on the screen. And while you're in boot camp this week and probably all of next week, feel free to check it out. If we post a trade, we'll let you know in the chat function of the room, and then you can just hop over to the FX Pro room and see what's happening. But we're absolutely thrilled to be here. And Vince, if you you got anything on your chart that is exciting you right now, or is this just kind of a sideways move today? You see a little dollar action there.
Well, again, since this is a 24-hour market, and as I've mentioned, I'm a dedicated trader. The trading is in my blood, and I literally sleep, 2-3 hours a day. This morning at 4 o'clock, I took this short on the dollar CAD, as you can see here. I'm not sure if it's coming in clear. Let me draw my little circle right here.
Can you blow up your chart a little bit? Does it get any bigger, or is that it?
No, it does get bigger. Hold on a second. I figured by keeping it this way, it'll probably be, let me go ahead and blow this up and see if this is better.
There's no time like the present. You might as well go ahead and start.
Right. So this morning I took the nice short on the dollar CAD. This is our demo account, and we're going to be trading demo here and to show you how we can build an account. But these trades that I take in the demo, I also take in a live account. So I took the same position in the live account this morning at 4 a.m. and I've been in it ever since. And I got in. So the high now. Bill, let me ask you a question. When we did the non-farm payroll last Friday, and I spoke to you about the dollar CAD, I mentioned to you a target that I was looking for the dollar CAD to head towards. Do you remember what that number was?
If I'm not mistaken, it was right around that level right there, isn't it? Well, I can't see your chart, to be honest with you. The margins, it's a little bit small on my screen. I'm going to try to blow it up a little bit.
Hold on a second. So let me do this. Okay. So you see this chart right here on the right hand side?
Hold on. Yes.
Okay. So the non-farm payroll, the dollar CAD was at 130, and I had told you that we're probably going to see 132 on the dollar CAD. Well, today we hit 132. Here you go.
I see the top of the candle, the diamond, the blue diamond.
Right here. So if I do this, 132.11, and guess where? And guess who was ready to short the dollar CAD? I was. It happened at 4 o'clock this morning. I set my alerts, and they start ringing. I got out of bed, ran to the charts. I analyzed what was going on. We saw a huge rally from the non-farm payroll all the way up to 132. And here I am shorting it right now because it hit our target. So this short right now, we've already booked 50 pips. And we're leaving the balance rolling here. This is a one standard lot, if you can see here at the bottom. Okay, so that's what's, and right now the profit that's floating out of this is $186. Okay, or actually it's 186 pounds. This is a pound account. So we're looking for a target on this dollar CAD to about 131.15, maybe 131, and then from there.
Vince, let me just ask you something. I hate to interrupt you, but do you trade? You're a live trader. I know you're always looking at the markets and waiting for your levels to be hit. Do you occasionally use resting orders in a situation like this?
You mean like limit orders?
A limit order, yeah. Then with an automatic stop place, that type of thing.
You know, when it comes to the London session, if I'm sleeping, I don't like putting any limit orders in because you never know. You know, one thing I didn't share with the audience here is that I've seen, you know, back in 2007, 2008, I've seen bank interventions. We haven't seen any of this going on lately, but I've seen bank interventions where at 4 o'clock in the morning, currencies would reverse like 500, 600, 700 pips on you. And imagine if you have a limit order and you're not there to attend it. So I chose not to put limit orders in. And what I do is I set my platform, I set alerts. So I come here and I set my alerts, and whenever price reaches that area, my platform alerts me so I can attend and watch the market. And if I feel that the trade is valid, then I will execute the trade live. Now, when I'm trading during the daytime, when I'm much more active, then I may put a limit order in place. But most of the time, these are instant execution.
Yes, I know that, and I agree with you. I've seen a million really broad moves happen. I mean, I was on a trade desk back in '93 when George Soros literally cornered the British pound, and my arms are spread as wide as I can right now, and I'm not a small guy. We were making bids and offers that wide because that's the way the market was behaving that day. And the point I think Vince is trying to make is that if you have a limit order and it's a live market, you might miss a perfect trade occasionally, but what you could wake up and it could be 100 points through your limit order, and you will have just thrown some money out the window because something came out. The FX market has news breaking constantly. A central bank will say something. Somebody will make a comment about a trade deal with Italy from Great Britain or something like that. You'd be amazed at what drives the FX market. It's extremely newsworthy, and it happens at the drop of a hat. So what we're going to teach you to do is to have to look for these areas that we like for in terms of buying and selling, support and resistance, but to always have a sort of a, wouldn't you say, Vince, to always be mindful of the fact that this thing may set itself up for a completely different trade because the parameters will change on a dime. So you want to be nimble and quick on your feet. And the only suggestion that I always, Vince, I know you will, when you have an open position, you'll put in a stop loss most of the time if you're not there to pay attention. Is that right?
If I don't put well, again, it depends on the type of trade I take, but yes, I always have a stop loss in mind. There's, a soft stop and a hard stop in place, and depending on how much I want to risk on the trade, yes, there's always an area where I look for a stop loss. And correct, you have to put that in, because if the market breaks out in the opposite direction, there's no point in holding on to it because it's not coming back. And if it does come back, it can take another 6 months. And who the heck wants to hold a position for that long? Even though I did that in my infancy of trading, I don't want to experience that anymore today. And I don't.
Yeah, everybody does that. Everybody does that.
And I don't. So one thing that I've learned and I've mastered, and you may say, well, why the heck do you call yourself a master? And I like, it's just a name. And the reason why is because I love what I do. Okay, I read price very well. And one thing I do teach a lot of students is stick to one currency, master that currency, know it in and out. And once you know that, there's no reason for you to not make any money, right? Because our goal here is to make money. And one of the flaws that many traders have is that they like jumping from one currency to another currency. And that's fine. If you know the harmonics behind that currency, then you can. I've mastered 8 to 9 currencies. So if I jump from one currency to another, I know what's going on and I'm capable of swinging back and forth. But for a beginner, it's impossible because, you're always depending on someone else to guide you here. Okay. So we have a question that here says the JPY made a low for the day around the noon Central Time.
Yeah, could you just pop your yen chart and blow your yen chart up there?
Well, let me tell you something about the dollar yen right now. Okay, so the dollar yen has a major support level at 110. So it's very possible that this may be heading right back down again to retest the 110 level. So right now, this dollar yen is stuck in a range between 110 and 115, 116. All right, so if we see this dollar yen make a move all the way back down to 110 again, we are buyers of the dollar yen, okay, with a stop loss of about not more. And when I'm saying a buyer, I'm talking long-term buying. So in other words, we're expecting the dollar yen to go from 110 back up to 115. Our stop loss will be about 100 pips. So that means about 109. So if we break below 109, 108.50, then there's a very high probability we are going to revisit 105. And if we break the 105, we revisit the 103. So I'm finding there's some good support here at the 110, and it's slowly making its decline back down to that section. So in a situation like this, like for myself, because I'm more of a position trader, I'm not trading the dollar yen right now. I'm waiting for it to come down to either 110 or maybe start making its move back up to 115 and short it again, because it's stuck in a range right now. So if it does make it down to 110, I am a buyer of the dollar yen, 100 pip stop loss for a potential of 400 or 500 pip profit, and that is a 4-to-1 win ratio. So hopefully that answers your question.
But intraday, it looks like to me like a bottom's been put in for today, around that support level of, what is that, 111.75 ish, something like that, 111.70.
Let's see here. I have.
I just can't read your margin.
Yeah, 111.80 right now. That's the low I have, and the high. This let's see here. Give me a second. This is a 30-minute chart. The high was 112.57. So it completed its range for the day. Again, we would have to go to the higher time frame and see what's going on here for me to give you a pure detail. In other words, this looks like there's a correction that is occurring on the dollar yen. And if you guys know a little bit about Elliott wave, this could be a potential ABC correction. And if we're probably doing a B wave here right now, we could be coming down for a C wave. And if that occurs, that C wave will take us down to about 110. And if the dollar yen heads down to that 110 mark, I am a buyer of the dollar yen. And that's because I studied this pair for a long time. I know all the support and resistance levels. And let me tell you, once you know these levels, there's no reason for you not to execute a trade. And most important, knowing where to put your stop loss. Because again, many traders, they take a trade and they say, well, I'm only going to risk 5 pips. And 95% of them get stopped out. And they say, well, I'm always getting stopped out. I'm always getting stopped out. I said, well, yeah, because you're not putting your stop. Well, number one, A, you're not executing correctly. And B, you're not putting your stop losses in the right place. So if you're going to put a 5 pip stop loss, you know what? I'd say 95% of the time you will give your money to the market. And I say, well, why give it to the broker? Give it to charity if you're going to have to do it that way, right? That's how serious I am about this business. So this is what we're going to show you in our room. We're going to show you proper entries with proper stop losses. And hopefully you'll see this account that we're trading here, our demo account, increase in value over time.
Jump back and take a look at your dollar CAD.
Yeah, let's go take a look at the dollar CAD. So like I've been having a little bit of a, excuse my language, a hard on with the dollar CAD. And the reason why I'm enjoying the dollar CAD is because the dollar CAD is giving me clean 100 pip range per day. And because I've studied this currency extremely well, when this currency last Friday, if you go check your chart on the non-farm payroll, it was at 129. I had told Bill, we're going to see this dollar CAD revisit 132, and it happened today. So how did I know that? How did I know that? And this is what I like to share with the audience here. So if you like what you see, and you especially like what you hear, then I think what is our subscription cost to join our room? I don't have that information from me. Maybe
we're currently priced at $68 a month. It's kind of covered maintenance costs, basically.
$68 a month is like it's one half a trade. You'll get that money back, half a trade. Okay, and the information that you'll be getting for $68 a month is valuable information. Valuable. Like I said, I've gone in other rooms. I've done this for 4 or 5 years, and my objective is always to at least give you back your monthly subscription fee. If I can at least show you a trade that pay your subscription fee, then everything else is free. So anything else you do from that point on is in your pocket. And $68 a month for this information that we're going to be offering to you is unheard of, because there are people out there that are willing to pay a couple of $100s for this. But
Now, wait, let me also add that for you guys, this translates well to currency futures, obviously. If
yes,
if any of you understand the difference between the inversion of the spot market versus the way you're used to looking at your currency futures, we speak that language as well, and we can certainly translate it for you.
absolutely.
Will we necessarily be able to put up on a moment's notice currency futures charts? Maybe, maybe not, but we'll certainly, you can ask your questions about levels and we'll be speaking the same language. Now, this is an MT4 chart. MT4 is, for those of you who don't trade FX, MT4 is the low barrier to entry in terms of your ability to get in and out of a market for liquidity purposes. Man, trading on MT4 is a breeze. I mean, really a breeze. You can get in and out with single clicks. You can quantify your risk. It's it's a terrific platform. It depends on the provider who you're looking for. If those of you who've been watching the news know that FXCM is having issues, so our U.S. marketplace is going to be consolidated even further now. So it's going to be making opening an account. It's going to change the dynamic a little bit, but it certainly is going to be. It's a tremendous fun. And it's very easy to trade. So we're going to be trading spot FX on these charts. It translates beautifully if you're a futures trader. Spot FX trader, anybody that's looked at an FX chart will know what the heck we're talking about. So these support and resistance points translate really well to anyone who's trading.
Absolutely.
And that's what we're going to be giving you guys. So and this chat. Now, Vince, let me just explain one thing about Vince, why he loves Dollar Canada. It would have nothing to do with the fact that you live in Canada, right, Vince?
No. I mean, I trade. I live in Miami, by the way. So, but I mean, I'm just trading the dollar CAD because it's the currency that's moving the best right now. In other words, Canada doesn't have any political issue compared to what's going on in Europe or Great Britain. So, and I tend to stay away from those currencies because you can get into a trade and then one little piece of news comes out and or a surprise news, and whammo, the darn thing goes against you so quickly that you just don't know what hurt you. So I'm enjoying the dollar CAD right now, but I mean, I trade the pound, I trade the euro, I trade the dollar yen. I mean, my favorite currency used to be the New Zealand dollar. And the reason why I love the New Zealand dollar, because the harmonics behind it was perfect. It used to move very nicely when interest rates were at 3%. It was one of the best currencies to trade when we had risk on. So when we had risk on, we would come in and trade either the Aussie or the New Zealand, and the darn things would just fly because everyone's pumping their money into those currencies to receive the premium of the interest rates. So right now, those currencies are stuck in a range. They haven't been moving nicely, except for yesterday, where New Zealand came out and kept interest rates at 1.5%, and the economy seems to still be slightly bullish. So we saw a little rally in the New Zealand dollar. Okay, but once that news is out, right now these currencies are pretty well range bound, and it does make it a little bit difficult to trade. In other words, if you want to trade those currencies, you really have to know your proper entries and exits. The dollar CAD in the last 2-3 months has been range bound, ranging about 100 to 100 pips a day, 100 to 120 pips a day. So it's making it a lot easier to trade. And the fact that, as you can see here, I got all these like blue lines, magenta lines. These are all historical support and resistance that I've accumulated over the years. And as you can see here, if you start seeing an accumulation here, you have a good idea that this is either a major support level or a major resistance, and it keeps on retesting it over and over. But sooner or later, we're going to have a break either above or below, and guess who's going to be there to take the trades? We are, because we have a good understanding on how to trade these support and resistance. And these support and resistance levels are recognized by the entire market. It's not something that I just made up by myself here.
No, you're absolutely right.
These
support and resistance levels are seen, obviously, in price action. Everybody trades off the same charts. The pros that are sitting there with like Danny says, yards, which are billions of currencies. With if you have that type of weight, you're still looking at the same charts. You're still honoring the same support and resistance levels, and that the understanding those historical points is hugely important. Now we're at the 2 o'clock level here at the time, so we got to start turning over the room. But I want you to understand that this is the kind of stuff we're going to cover on a daily basis. We talk markets. We talk market fundamentals. If there's something strange coming out, we'll talk about it. If there's a news release or an announcement from a central bank that's likely to flip a position or to put up a yellow light that you might want to not, or even a red light that you really don't want to accelerate through, we'll be there to analyze it, break it down. So we can talk markets, and we're going to talk trading during the day. So we'd urge you to, if you know anybody in the FX game that wants to come in while we're still here we're in the boot camp, bring them into boot camp, or bring them in next week. We're going to be around, and it's going to be easily accessible. We anticipate all of next week. Bring them in to say hi. We'd love to talk to you, talk markets. And that's the kind of thing that we're going to be talking about all the time. So,
and Bill, don't forget, we're back here tomorrow at the same time. So what I'd like to do tomorrow is show you some trade setups. We'll see if we can find some trade setups. I'm glad in a way that we got this dollar CAD trade in, so you guys can see it for yourself that this is an actual trade that was taken. You can see the entry level at 131.96. And right now, and our target that we're looking for, so this may happen by Asian session, we're looking for roughly about 131.11 to about 131.15. So you guys take a look, note it on your side, and when we come back here tomorrow, we'll see if we get stopped out or if this actually makes it down towards this 131.15. So it'll be exciting if it does make it down there. I'm aiming for that target right now. It's taking a little bit longer than anticipated, but this will just continue to prove that we know what the heck we're talking about here, and it's an important factor when it comes to trading. So that's it for me, and I look forward to seeing you guys back here tomorrow. Bill?